8. Okay, here we go. Welcome everybody. It's 8 o'clock on Friday the 25th of August. Hope you've all had a good week. Over on Discord we've been streaming ES and the action, or the slow grind up to some resting icebergs, sell icebergs, which are in the direction of the heavy liquidity, i.e. the heavy liquidity is above. So anyway, let us start with our disclaimers. Okay. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay. All right, that is the screen that I've been showing in Discord for the last 10 minutes. So that's now up on YouTube as well. Okay, all right. We haven't got slides necessarily for this presentation, but we are going to be doing a repeat really of last week. Last week on the Friday, we looked at trading supply and demand, 3 particular setups. To the long and to the short side, so that's 3 long, 3 short. In the little session leading up to the London Open and the 90 minutes thereafter, we actually had quite a lot to go through, so we didn't go through that many setups because each one we did in quite a lot of detail. We're going to do the same with ES, but first of all, because it's been a big week, we've had a major Nvidia beat on its earnings, we've got Jackson Hole, etc., and we've had a lot of movement yesterday, so it's probably worth doing a quick recap of some context. So if I switch from the screens onto some slides. Okay, just having a look what we have lined up. We're here between 8 a.m. and 9 a.m. Eastern, and effectively there is nothing for us to talk about in terms of economic releases during our hour of power. But if you go fast forward to 10 a.m. and 10:05 a.m. Eastern, you've got Fed Chair Powell. So there is likely to be a bit of volatility around there. In fact, you've got a few different speakers. You've got Powell, Harker, and Goolsby later on in the morning, so that there should be some volatility. And if we look at what happened yesterday, that's another reason why we may get some volatility. Okay, before we do that, let's just look at some stats. Somebody asked about that during the session on Wednesday, so I thought I'd actually include the slide up front so that people can see that I am looking at stats all the time, but I only look at them in the sense that they are statistics and nothing more. The ones we're looking at are up here, and we're looking at, after a big session yesterday, averages today. The average is the right hand number, which is for ES that column, and for NQ that column, and today's is range is the left hand column. So for ES in Asia we've got 10 with an average of 14, and Euro at 20 with an average of 27, and so far in ETH overall 20-point range against an average of 29, and for NQ 104-point range against an average of 141, but that average has been boosted upwards a bit by some of what happened yesterday. So especially the RTH, if you look at the average now in NQ for the RTH, 246 points, and we will have a look at the range in yesterday and we'll see why that's boosted that up. And the other number that we look at here is the relative volume, so we're at 88%, so it's still reasonably good, not enormous. You'd expect after a day like yesterday with such significant range to be over 100, but it's still good, and in light of what happened yesterday, still eminently tradable. All the other stuff relates to RTH, and since this is an ETH webinar, there's not too much point dwelling on it. Oh, by the way, as usual, I am on Discord and on YouTube, so I can see comments on both, and feel free to fire off any questions. Okay, all right, this is the daily picture on ES. Again, I did mention that I do use trend lines on a very high time frame basis and a very small time frame basis, or short-term time frame basis. The lower line here, the less steep line for ES, has been the longer term multi-month uptrend, and that's the trend line there. We broke it decisively, and it's interesting from a pure Wyckoff perspective or a trend line perspective that we did come up and retag it. I'm not saying that I'm not actually commenting on any probability of that occurring. I'm just saying that on this occasion that did occur both for ES, and if we move across to NQ, pretty much almost for NQ, not quite the same, but it got close enough. And I actually think that is a good point to make, that trend lines are a rough guide. So the fact that it provided a zone of a potential retest, the fact that it didn't get there is neither here nor there. It provided a zone, it got somewhere near that zone, or it got into that zone, and actually the NQ hit its 50-day moving average. So there was some confluence there around that kind of stuff, and that's about as far as we really talk about technical analysis in the true technical analysis sense in these webinars. Okay, let us move on. Okay, on to the TPOs. So here we have ES. I'm just looking at the numbers because they are very small, and I admit they're very small in this screenshot. And I think the thing to note here is how large the RTH range was yesterday. And a couple of other things to express from a profile perspective. This is more profile than it is Wyckoff here. If you look at the range of ES yesterday, not only is it huge and being an outside day, it's actually a double outside day. In other words, it took out what were effectively two up days after the NVIDIA beat. Hold on, CMJ is not seeing anything but Bookmap and TV charts. Oh yes, sorry CMJ, this is because of the way Discord operates, so that even though that is currently visible in YouTube, it's not. So if I dragged it across to my third monitor, you'd see it, but it's for the purposes of the YouTube webinar and historical viewing if people watch this. And most of the people that have been watching my webinars over the last few weeks have been watching on YouTube after the event. And thanks. Yeah. Okay. So going back to what I was talking about. This is more profile, what I'm about to say, than it is technical analysis. So you have a day which took out two up days, and so effectively anybody not anybody, a large proportion of the buyers, or the longer term buyers that bought on this day or this day, have been taken out and are in trouble after what happened in yesterday's RTH. I think amongst the various commentators out there, Shadow Trader put out a video today saying it's the type of day he calls a buyer's shut-off day. That's where it basically takes out a lot of buyers.
NQ by 90 to stop.
All right, let me just get. We just had some action, so let me just switch back to the screens there. One of the reasons why we had our screens up early in Discord was because we had these sell icebergs that came in at the last swing high. We had 300 there, and 300 is a significant number of sell icebergs or resting sell icebergs at this time of the day. And again, we're talking about ETH, not RTH, and we're talking about a little bit of time before the 9:30 open. In our current context of the action that's been happening in ETH for the last few days and a few weeks, 300 is a significant number. And there's also a proposition or a supposition that I occasionally put out in these webinars that if you have a significant sell iceberg, it acts as a target for people to come and retag. It's basically the auctioning theory behind it is that they are advertising that they did transact at that level and are willing to continue to transact at that level. That's the basis of the theory for why it may get taken out. You also have confluence here, which I pointed out a little bit earlier, which is that you had most of the liquidity above. So in terms of the magnetism, the magnetic effect of resting liquidity, that was driving price upwards. And one of the things that we said in the Wednesday webinar was that we look, or I rather, look at this outside liquidity marker, which is 2,000 versus 2,500. I'm looking at the ratio. I'm not looking at the specific numbers. So it's 2.5 to 2 or 5 to 4 or 1.25, depending on how you process ratios in your own head. Anything that is significantly above 1 to 1 is the basis of forming some view or opinion that it may go in the direction of the higher ratio. And here, the higher ratio of 1.25 or 5 to 4 was above. So again, just a confluence that those two factors, the resting sell iceberg and the clear liquidity above. And if we go down to if we go down to the 3-minute chart in ES and NQ, sorry, we'll look at the ES one because this is ES, so NQ is secondary. It was probably a poor high. Yep, it was a poor high just looking at the TPO across. In other words, there was an opportunity for the buyers to flush the stops of anybody that sold around the overnight high or the previous overnight high. So you had a confluence of three factors. In Wyckoff terms or supply and demand terms, generally, the more confluence factors you have, the more weight that some people put on trades. I don't necessarily look at it that way, but I do like to see all the factors that might be in play, and then I think in terms of liquidity and stops. So if any of those factors point strongly towards stops, great. It's something that I will be watching and thinking about. If it goes hand in hand with logic or common sense, not that the markets always operate with common sense, it's again something that you might take into account. I mean, here we had a huge down day. So if we go back to the images again, get off the screen, and we'll go back to the images, we had a huge down day. Yeah, that one's ES again. So after a huge down day, there's always the potential for some retrace, and a lot of people like to look at yesterday's mid value as a point of retrace, i.e. a 50% retracement of the prior day's range as a typical example. Typical, again, is a dangerous word to use when you are talking about trading, but for a large range, it's just a statistical measure. I've done quite a lot of analysis on things like technical analysis indicators and the probabilities associated with pullbacks, and you will never hear me talk about Fibonacci, or you'll never talk about me saying that Fibonacci has any statistical weight in any of these webinars. So when I'm not much of a probability trader, I prefer doing other setups. But if I was, then a 50% of a large move is something that I would look at if that is what I was doing. But it's rarely what I'm doing. Okay. All right. We will keep on with the images. So you have the NQ again. It's very similar. The NQ took out the prior 2 days, almost took out 3 days worth of range or RTH range, and we are stuck at the bottom part of the range in NQ. That's yesterday's RTH range, and we are below value. So value really is that zone there, or that wider zone there, and NQ currently is below it. So there's always potential it's going to go back to its mid of yesterday, or at least where most of the trading took place. In other words, it's VPOC, volume point of control, that kind of thing. If we go back to the ES, it's got I cannot even read my numbers because they're so small, so I'll have to look at my other screen. So the VPOC, the VPOC in ES is up at 4420, and you've got a lot of value between 442450 and 4401. So once you get into that value, again, this is one of those theories or learnings that people teach you about in the profile world, that once you get into value, there is a statistic that it will cross all the way to the other end of value. Again, that's not something that we are going to comment on in this webinar. Stephen, yep, sorry, I will get back on that screen. Yeah, sorry, Stephen, I've been talking about what's on YouTube. I'll have a think about that for future presentations where you've got people in Discord not seeing, well, the slideshows that I'm showing in sorry in YouTube, and it is a valid point. I've got OBS Studio going on my fourth monitor, so I'm able to flick around between screenshots, images that I've captured, the bookmap slides, and the streaming screen, which is my third monitor. So Discord, really, the way Discord is set up for streaming, it is just that third monitor. So it does not have access to my OBS Studio in the way that YouTube does. But I will have a quick think about that as well to see whether I can arrange it so that it is looking at the OBS Studio output rather than just the screen of the third monitor. It's actually in higher resolution, I believe, in Discord. So the screen that you're seeing right now with ES grinding up into the liquidity up above, and what have we got? We've got 208 at 4405 and 235 up at 4409. That's probably higher video quality on Discord, but again, since I'm not really looking at either, I'm just having a quick look up at YouTube. Yeah, the quality seems okay. The numbers are small, but there's a reason why I've got my numbers small. It's so that I can fit more onto the screen and show you more things, such as the 3-minute charts in ES and NQ, to put some context into what we're seeing in ES at this time of day in ETH. And I can't stress enough, and I try and stress that again and again, context in the ETH is critical, in my opinion, because the RTH market, i.e. the underlying stocks that form the S&P 500 index, are not fully open. They have a pre-open session for which opens about an hour after the London Open and then opens properly at the 9:30 Eastern time. But because you've got a large chunk of ETH where those stocks are not open, the correlations with other drivers such as the currencies, gold, other indices that we've spoken about and we will continue to speak about in this webinar are probably a little bit more important than they would be in RTH. Okay, right. Okay, let's get back to the slideshow on YouTube. Again, I will consider what to do with Discord on the slides for the next time. There's just a couple more slides I wanted to go through. Okay, that one on Discord you don't need to worry about. This is the resting sell icebergs, which I screenshot in Discord about 40 minutes ago. Okay, and finally, this is the only other slide that you won't see on the YouTube on the Discord channel that's in the YouTube. I have done a snapshot of a very low time frame because the main purpose of this webinar is the 90-minute period of ES between the London Open, which is 3 a.m. Eastern, and about 4:30 a.m. Eastern. What I've done is I think I've got a 15-second, just a candlestick chart of ES, just to show as an example that if you're trading such a short period of time, and we are talking about 90 minutes here, it may help with you seeing supply and demand setups. Again, we're going to go into those and I'm going to draw those and explain the logic behind each of those three in a second. You may get more setups and you may get better entries if you are on a smaller time frame as well as your overall time frame, whether that's a 3-minute, 10-minute, 15-minute, hour, whatever you want to look at. I'm just saying to help better identify the supply and demand zones. If you need a time chart as well, you may want to look at a smaller time frame, or you may be perfectly happy with being able to see those time frames as we zoom in and out of Bookmap. And again, I think you can do, but it's just a thought. Anyway, let us go back. So we are we'll leave that screen as it is. We are going to start drawing again. So bear with me with this one again. So, right, let's see if this works. Yes, miracles. Okay, let's see. I think I'm drawing in blue this time. So we are drawing in blue. We're going to do the shorts first. Okay, and we are going to do A, B, and C. Again, I apologize for my drawing and my handwriting. Okay, so here we have a swing high. This is high, and we have price moving down. So the question is, maybe we use another color here. Is this a supply zone? So that if price comes back to A or to B or to C, do we have a valid setup in supply demand terminology to then take a trade, a short, to get us down and get us at least 1R in terms of matching our risk and hopefully getting a multiple of the risk dollars that we put down in this trade. Okay, so go back to blue, or maybe we'll go into this dark purple color. Okay, all right. So what is the rationale for trading supply here? And again, this is a recap of what I did last week, but I just thought because we are doing it again for a different instrument for the same period, 90 minutes, but today, why take it? Okay, so if we look at A first of all, the rationale that it will only come up to A is that there is really strong supply here. In other words, sellers were really, really keen to get on board and push this price down, and they've got a view that they want to get the price down to, you know, wherever, whether it's down here or down here or down here. So in other words, the rationale for A is the strongest desire by sellers. And the rationale for B is they're not quite as keen, or they are keener to get a better price. You remember they're selling, so the higher it goes, the better their price or their potential profit. So B, slightly less keen sellers. They want a better price to sell it. And C is the classic upthrust or breakout failure. So in the example of C, what they want is that you may have had some sellers, you know, here or here or here. They want their stops to be flushed and to get an even better price at C. So they want to take advantage of some of those initial sellers who may well be on the right side for the actual bigger move, but they want their stops to get their price to be the best possible price and then ride the way down. Okay, so so those are the three variations of the supply and demand. And again, I mean, if we were going down, let me go back to blue. So if we were doing exactly the opposite, so if price came down here and then it was retracing back down, we've got exactly the same thing. So you've got A, you've got B, and you've got C, but in reverse. And there, everything I've just said applies symmetrically, so the other way around. Okay, and you know, where are you wrong? Yeah, the clearest way, the only one that is 100% clear, or as close to 100% as you're going to get in this business, is this one, is C, the breakout value. If those stops have been flushed, then the risk point is the end of that flush. This little, if that was the swing high and we went up to there and then retraced down, that is where that trade is wrong. The others, you've got some measure of it being wrong around about here, all the way up to around about there. And that's when I start talking about volatility-based stops, or I start talking about fixed point stops. That's what I'm talking about more for the A and B variations of that setup. So, that essentially is the supply and demand that we're talking about. So if we just ditch all of this and we go back to ES, let's have a look at what actually happened today. And we're grinding up towards that liquidity, which is kind of expected. I put that supposition out probably at about, I don't know, when did I put it out? I put it at 7:26, so about just over half an hour before the webinar started. Now this is the fun bit, which is always fun, trying to drag this back to roughly 2 a.m. Eastern. Okay, and the best, I mean, even though we've looked at the context of what happened the previous day, one of the best things you can possibly do for your own trading is to go in with a completely clean mindset. So you accept that anything will happen. So that, even if you thought, oh, it's going to go down further, or oh, surely it's gone down too far, it's got to retrace for reason A, B, and C. I'd say the better approach was just to say, I don't know what's going to happen. I'm going to trade my setups. I know what those setups are. I know how to see them in Bookmap. If they come, I will trade them and I will try and get multiple R's on my risk where I can. Okay. Sorry, I have rewound too far, but we're almost there. Okay, we are there now. So we're coming into 2 a.m. Eastern. So if we, as we said previously, you've got the German pre-open, which is really this period here, 1:45 a.m. to 2 a.m. Eastern, 1 a.m., 1:30 a.m. I have absolutely no idea why the algo seem to like these round number half an hour points, but they often do. So it's just one of those, again, take what I say with a pinch of salt, and please go and look at your own charts and see when volatility or price action tends to pick up. So coming into this 2 a.m. German open, if you zoom out on the liquidity, and this is quite a heavy zoomed out picture, if you look at the range that I've zoomed out to, you've got 4,450 above and 4,330 below. So you've got 120 points. That's massive in ES. But sometimes you need to zoom out to get a full context on where the resting liquidity really is to see whether it provides some guidance or not. But bear in mind that the outside liquidity numbers that I've got here, and again, I'll show you the settings for that. That's just the 30 price levels above and below where the last price was traded. Okay, and the last price traded here is going to be this dot here. So it's not the last price traded now at 8:28 a.m. It's the last price traded wherever I dragged the Bookmap heat map to. So at that time, you've got a ratio well above 1. You've got 1.8 to 1.4, and with the naked eye, you can clearly see there's a heavy band of liquidity above, which may act as two things. One, it may act as a magnet, and two, it may act as resistance on the initial approach or touch. Sorry, I was just having a quick look across at the comments. And again, I repeat, please feel free to ask any questions you want. I mean, I did not trade this session today. I had other commitments, so I was not at my desk between 2 a.m. and 4 a.m. Eastern. So this is a bit of a learning one for me as well, since we're going to go through this in quite granular detail. Okay, I mean, I have seen hundreds of these before, and you get a flavor. The more of these you watch, that's probably another good point to make. The more of these you watch, the more you get a flavor of the price action that is likely to occur, and that is instrument specific. So if you watched 50 of these ES 2-hour periods, say between 1:45 Eastern and maybe 3 hour periods. You can always speed it up in Bookmap on a replay. 3 hour period between 1:45 Eastern and 4:45 Eastern. You're going to get a flavor of the type of price action and the type of games that occur day after day after day. And just because they played a game yesterday or the day before that, does not mean that is the game that they're going to play in the near future. But I'm just saying that if you've seen a 50 games or 100 games, you're likely to have seen the game that might play out, so that the shock or awe or surprise that you feel may not affect you in the same way that it distracts you from your trading process and your trade setups and your trade management and execution. There is nothing like experience when it comes to handling ridiculous price action behavior in these markets. Okay, right. So we've stressed that we have we've got significant liquidity above rather than below. Okay, but one thing that we do look at, and when I just drew it, was we are trading supply and demand. Okay. And we have broken our multi-month uptrend. So what I'm trying to say is that if we get a supply or a retest of a supply zone and it is a valid setup, it is something that you do look at, regardless of whether you take it or not. You would, in my opinion, be looking at it. And I'm just watching ES and NQ get to their high of the day now, so. They are going. I won't zoom all the way forward because it'll take forever getting back to here again. I'm just letting you know that the NQ is about to hit some liquidity up above at 14,910, and ES is currently at 0450. So I think I mentioned there was some liquidity up there, and it's tagging that second liquidity. Okay, so you've got a strong run up here. You've got 4384. You got over 6 points, maybe 7 points in this one swing upwards. And if you zoom right in, you can see it's a good strong swing with a tiny pullback. Okay, then it approaches. Let me zoom right in. Then it approaches. This is the A zone on that supply demand zone, or the supply zone chart that I just drew. So we haven't quite got the double top. We haven't got a flush at that stage of any stops and a reversal. We've got to this A zone. So if you believe that if the sellers were very keen to move this one down, this is the zone that you would be looking at. Are there any other help factors for us on this particular part of this Bookmap chart? Again, maybe I need to drag this one across. I know I had the 15-second earlier, but I can't show you a 15-second in ES in TradingView because I have a very basic plan in TradingView because I do my main analysis in Sierra for time frame kind of charts. Okay, let us zoom back down to 1 minute on that one. Okay, and we're coming into this 2 a.m. zone. So this area here is corresponding to what we are seeing in Bookmap there. So I'm saying that you're here there. One of the things that we like to do, or one of the things I like to do when I'm looking at supply demand setups is, do I have a target that is valid in my eyes, as in something that I really believe in? Again, I didn't trade this session, so I'm coming to this kind of cold in the same way that anybody else who's looking at this and who did not trade this session is. So what am I wary of when I look at this one? I'm thinking over the longer term, i.e. the next hour and a half after this, that this liquidity up there is likely to be at least approached, if not touched and interacted and traded at. So I'm very wary that if I do take a supply retest short here, it is more of a scalp or short little swing than it is a longer thing that I'm going to be able to hold for the next 90 minutes. But that also contradicts what I just said, which is that you do not predict the future. You do not know what's going to happen, and you must go into this with an absolutely open mind. So that, if you've got this valid setup, I haven't got a trigger here on the market pulse or anything, and all I've got here that might have been a trigger for me is what I said the other day, which is a test of large volume. So I'm looking in here and seeing a trade of 300 there. So that's a retest almost back to that 300. It didn't quite get to be a true retest in NQ. The fact that it got close is good enough for me. With ES, I'd like it to get a little bit closer. So I probably wouldn't have taken that trade. Uh, and maybe coming into the German Open and knowing how ridiculously volatile the price action can be, I would have been a little bit wary of that. But I'm just saying, if we had had a retest of this and it had been a nice bit of absorption perhaps into that, I would have taken that with a tight stop. And by way of tight stop, I'm talking about two and a quarter points on that one, and trying to target this low here. But anyway, let's keep having a look to see what happened then. Okay, so we have this volume of 300 that we just identified, 362 actually, or maybe we zoom in again, 317. Okay, that is a retest here. If we look across at this column, we've got some delta, positive delta at the top. We've got a retest. We're right in the supply zone. We're right at the German Open. There hasn't been some kind of massive panic buying where it just zooms up 5 points in 30 seconds. So here, with some buyers being absorbed, and you can see you've got 302 buyers. In fact, we just drag this one across a bit. You, One of the things that I do love about quickly analyzing absorption in Bookmap and having these three columns here, the delta, the sells and the buys, is that I can quickly zoom in and out and drag and look at how many buyers are potentially trapped here if we should go down. So if I should take that retest of that 300 trade and take it as a short, you've also got this resting buy iceberg. It's not something I tend to target. You'll see me talk much more about the resting sell icebergs above than the resting buy icebergs below, but you do have one here, and it does get tagged and flushed. Right. Okay, so I'm saying that is a valid, very small. Let me get the pen out to work out if we even get 1R here. All right, and let's get the pen out. So say we get in around about here, and say you manage to get in at 4390.25, and you want a tight stop, right? I think I do not tend to trade with less than a 2 point stop unless you've got a massive iceberg to hide behind. And I talked about that the other day as well. So say, for example, you have a 2 point stop, right? And so we're talking up to there. You've got some liquidity as a wall there, but that's 2 points there. And you've got this as your first target. So you've got the buy iceberg as the first target, which is at 89. So you've got less than a 1R. So it's not looking like an absolutely great first target. As a second target, you've got this swing. Whoops, Daisy, that was a very wobbly straight line. Let me do that one again. You've got a swing low at 438.75. So you've got to have some conviction or some rationale behind why you might want to take that rather than this as your target. So if you've got that, then you have 2.5 points. So as your first target, in which case you've got over 1R in the trade. So it's looking like a slightly better trade rationale. But again, you've got this liquidity up above, which is the danger. We've got a period where up until the London Open, the direction hasn't really been set. There's no real indication that we're going to go much lower. I mean, I can't really find any rationale by looking at the liquidity or anything for saying that we are going to go down much. So I'm just saying that again, it is technically a valid setup for a retest of a supply zone, but yeah, I just don't have a target there that I would necessarily have believed in. And I would have strongly believed with the amount of liquidity that was above that at some point we were going to go up. Okay, so the other potential, so if we get rid of all of that, the other thing to look at here is this spring, or I mean, we talked about this as C on our supply and demand. So we have this swing low here at 89, and they take it out by one tick, right? And in so doing, they tag the buy iceberg, which they'd advertised and transacted at, and then you have a very clear target up there, a very nice target up there. So that is the kind of thing that, where even if you're wrong on this trade, I mean, what are you risking there? I mean, you could say you're risking the 2 points. You could go ultra aggressive and say I'm risking 6 ticks, because it's this time of the day where the market is not as volatile as the London Open, and I'd love to get in because I'd love to target up above at 439.675, 439.7. You know, even if you took your 2 points there and you got in, say, around about there, which is 89.25, so that's at least 7 points, 7 points, and you've got 2 points. So you're saying that the main target there is 3.5R. So that is a spring. I don't think that's what happened, but let us keep having a look at what did happen. And again, most of our focus will be on the action at the London Opens, which is at the 3 a.m. So this retest of the sell liquidity, or the 300 trade, and again, I'd love some way that the absorption indicator did actually, I mean, I'm pretty sure that would have happened within 1 second, so I'm a bit surprised that we did not get a little icon up here saying 300. That would have been a little bit easier to see in hindsight. But anyway, that looks like that was the trade. So even though I liked the spring, I would have been stopped out there. Whereas if I'd taken, if I just taken the less obvious trade, which is the short at the retest of the supply zone with a 300 trade, that would have got to the target, which was the first target being there, the 438.775. If we've zoomed out here, the problem with zooming out a little bit on some of these is that when they cluster the volume together and I get a volume of 381 and a volume of 300, that's not necessarily accurate in terms of what were the individual large trades that took place there. But you have got essentially a large cluster there, and if you look across here, you've got some delta at the top. So there you could say you did get a nice retest, and that went all the way down to the resting liquidity that was sat there at 438.175. Okay, so on this occasion, if you'd taken the least obvious path, or on the fork on the road here of taking the shorts and sticking with your process and sticking out with the setups, and again with our supply and demand zones, we're looking for factors that help us take those trades. So if we have a very large trade, and again I keep saying that the probability of a retest of a large individual trade is high, that is a confluence factor with a supply zone. So you had a large trade there, it got retested, and then even though it was retested twice, once and then twice, so effectively there were two identical setups here of a retest of a supply zone, both in the A zone. Yeah, didn't quite make it to a double top. So in the A zone, or the A variation of the supply and demand test, supply and demand setup, that was the one that gave us the big move initially until well before the London Open. There's also something that my colleague Tom says, which is very, very important when you're looking at the supply and demand zone stuff in the ETH session, and that is that we often go down to go up and go up to go down. So if we have a target which is up here at the 97, 4397 to 4400 zone, then the people that really want to go up will make their money twice. They'll make money driving us down, and they'll make money because people are too keen to go towards the obvious liquidity, and then they'll make their money by buying at a much cheaper price and then riding it all the way back up to the top. So you've got to be aware of that too, that sometimes things are too obvious. Okay, right, let's have a look at the next one then. Again, this is all hindsight, so finding these big trades in hindsight and looking for the retests. Okay, what I stressed, and I can pull up the picture again for this time of the day, is that if you are looking at this action here on a 1 minute time frame or a 3 minute time frame, now we had the 3 minute just over here, we've got the 1 minute over here. Sometimes you can't really see the first and second and third retests of, in this case, a demand zone very clearly. You can when you drill down into Bookmap and you find these big trades and you find out how they retested it. So you've got this big liquidity here. It smashes through the first liquidity, tags this one. You've got this interaction here of 173. Not a huge trade, but then you look at how it interacts once we get back above it, and that effectively becomes a demand zone. And you look at the delta at the bottom there. And I'm just saying that if you need to see that on a time frame, if you stick with 3 minutes or even 1 minute, you might not be able to see what is becoming that demand zone. So you might just get, let me draw this one again. So one of the downsides of candlesticks. And a footprint might have been useful here, and Bookmap does have a footprint that goes on it. So you might have, where's my pen? Come on, pen. You would just have one candle here, just something like that, and then it might just go up and up, right? Whereas if you went to a shorter time frame, you might well have a candle like that as well, or even another one that just pops up like that. So where they're rejecting a zone below and they're buying heavily in this zone here. So sometimes a short time frame may help you. Again, my drawing is dreadful, so apologies with that one. I'm just doing a time check, 2047. We've got no questions at all on YouTube, or do we? Let's have a look. No, we don't really have any questions. Okay, let's get into London Open because we've only got 13 minutes left, so let's zoom along a bit. If we go back in our minds to on this chart to the ABC, so if I'm going to have to draw again on a candle chart this time. So you've got your B being here, and you've got A essentially being around about here. This is A, and on this 1 minute chart, it does come right back down to that demand zone and then takes off towards that liquidity, which we knew was sitting up there at 97 and above. So the 1 minute chart there was useful. Again, 30 seconds, 20 seconds would have also been quite useful. Don't be too regimented or too stuck in your ways at looking at time frame charts. You might come across people in this business and say, I only ever look at 3 minute charts, or I only ever look at 1 minute charts. There is absolutely no harm having a look at things from different angles. I think one of the things that I use is a sit-stand desk. And one of the beauties about a standing desk mode is that you do get to look at exactly the same stuff from different angles. In other words, I can get away from my desk, I can go to the left, I can go to the right, I can go backwards and look at the same thing from different angles. Again, that applies equally to time frame charts. So if you just look at 3 minute charts, do look at some other time frame charts for a second. I mean, at the end of the day, all we're looking at really is where do they want to start buying and drive up in this scenario. So it does not matter whether you're always using a 1 minute chart or a 3 minute chart. Anyway, that was just my opinion on that one. Okay, so they managed to get through this liquidity, which they, in hindsight, was where they tried to get price down to, and a very, very keen area for them to buy at. So anywhere on there, this was an area that they were very interested to buy. Could not get back down to do a double bottom or even flush this it gets taken off as we approach. But if you can put yourselves in the heads of some of these algos, they managed to get in here, right? So that they would have been selling all the way up, and a lot of them would have either made their profits or rebought, depending on how far they wanted to drive this along the way up. They may have bought, then sold, then bought, etc. We do not know what they do, and we can only surmise. And the liquidity is a tremendous help or tool in forming our hypotheses or suppositions as to what they do. Okay, we're going to start zooming back in again. Right. Okay. On the London Open, you've got a clear drive upwards. So that's the one thing I want to point out there. That is, in anybody's language, that is now a demand zone area, right? You don't have any clear drives down. Even if I changed the vertical axis down and said that, if you look at this little move here, and again, we've got a pen, so we may as well use the pen. I may as well use a straight line on this occasion. So if you have a look at this move and then you compare that move, that's clear demand. That is not clear supply. So I'm saying that any retag of this zone with liquidity up above the 97 to 00 level, I'd be very reluctant to treat as a short. So just wanted to point out that a lot of this Wyckoff supply and demand stuff is on relativity. And the relative interest of buyers to go from here to there versus the sellers go from there to there. It's quite a contrast. So let us get rid of that. Oops. And let us just drag this on around so we can see what we've got. Okay. What would I do if I wanted to get long here? Again, I think I've given you one clue that I would be looking at a short time frame chart. I would be looking for longs just because of the relativity of the demand to the supply, and I would be looking at large trades and large trapped players on this, illustrated by these columns here. So with large trades, I'm looking at the big bubbles. I've got volume bubbles, not delta bubbles. The volume bubbles represent actual trades. Delta is just the difference between the buys and sells, so it doesn't actually tell me how large a trade was. I am, in this sense, a supply and demand trader, in the sense that I'm teaching this at this moment, and I'm also in practice very often. In fact, I'd say about 80 to 90% of my time I'm taking supply demand trades. So yes, I am a supply demand trader. So I'm looking at this 518 trade. I'm marking it. Come on. Let's see if it will draw it across. Yes, it will. And I'm looking for a retest. This, if we go back to this, it's a shame when it does that because it moved our line, so we have to get rid of it. This is also a swing low. You've got a really large trade, and you've got a swing low, and you've got a spring, so you've got a little flush underneath it. And up above, you've still got all that liquidity, even though they removed it at 97. You can see that they removed it there, and then they added it up above. In other words, they gave you a clue. It doesn't necessarily have to be a true clue, but the clue that they gave you was that they moved the liquidity, which is roughly the same amount, from here up above. So they're saying we are advertising the fact that we are still likely to be transacting above, but perhaps even higher. So there was a suggestion that it go further up. And also, I mean, one of the things that we looked at earlier was we looked at the range statistics for the European session. That range, I tend to start at 2 a.m. Eastern, so we've used up some of the range, but we have used up nowhere near all of the average range in this session. So I'm just saying that statistically speaking, there was still a good probability of further range upwards. When you put that together with the liquidity, and the strength of the demand versus supply, I'm still looking for longs. So you have a large trade, you have a slight breakout failure or spring, large trade there, slight breakout failure below that swing point, and if you had a 15 or 20-second chart, that would be a swing point. That would be a clear swing point. We've only got about 6 minutes left, so I'm not going to drag up that slide again. So I'm saying that this zone here, And ES is often like this treacle where it just goes up and down, up and down, up and down within a very small range for quite a few minutes. That would have been the best potential of any trade that we talked about during this 90-minute session. So I'm saying if you could going long, where have I got any trapped sellers? How many sellers are in this kind of region so that I know that, say they have a stop of 2 points, 4 points, 5 points, whatever their stop is, how far will we be able to take the market based on their stops? That's how I use those two columns when I'm looking for long, which is a retag of demand zone or a spring to go up to the liquidity up above. And in this case, they started advertising that liquidity of 4405, which we now know that they took out during the hour that I've been speaking. So that's how I would have been using these columns. I would also have been looking at the market pulse here, and um, when it's just going jiggly up and down, up and down, up and down. If you get some kind of reading that we're in this red zone of minus 70%, that is often a very good trigger to have. So you may not, what I'm trying to say is you might not have an incredibly clean trigger on ES. It is a totally different beast to NQ. And if you get a trigger like that on the market pulse in a good demand zone where we're retesting volume, that is about as good a trigger as you're going to get, unfortunately. And what is more important is that you've got the direction and the targets above right, and that they equate to multiples of R, at least 1R, preferably scales and multiples of more than 1R. We draw this, and we just draw this one across there. That is a lovely swing point spring on a 1 minute that drives us up towards the liquidity. So if you're using this 1 minute chart, and I use lots of time frames in Sierra that I do move around. I like different angles on the market, and you've got this liquidity up above. That is what gets you in. When you're looking at Bookmap, you're looking at what transacted down here, and you're looking in this area to see, are they absorbing and trapping sellers further to give us the fuel to get us to go higher? And that's what you're really looking at in terms of this spring to get you into the liquidity that did drag us up to the initial target of the 97.98s. And then, yeah, price hovered around there for quite a long time after that 430 mark, where we don't continue looking at the market. Anyway, I hope that was of some help in terms of looking at supply and demand on a granular basis. I've got a question, so I will quickly go and read the question in YouTube now. So whilst I'm still on air, Bellion's asking, in your observation, are there any particularized ETH that are most active, like I observe 4:15 to 4:30 a.m. after the UK initial balance being set sometime where heavy activity occurs? It depends on what has happened in the various markets that are open during ETH Bellion. I mean, for example, if there was a major economic news release in Japan and China, you're going to get lots of price action and volatility in that session. If you've got some major European economic releases at 2 a.m. Eastern, which you often do, then that hour, I mean, I think I covered it, from 1:45 a.m. Eastern all the way through to 5, 6 a.m. Eastern, it's going to give you setups. And again, I'm of the view that it is often better to look at two markets rather than one. So we have focused, last week we focused on Q, this week we focused on ES, but you might get better trades in NQ. It depends partly on what you're looking for, your style of trading, how many trade setups you want. If you prefer thicker market action, you're going to go more often with the ES, but I'm just saying having the ability or the willingness to expose yourself to both of those markets and setups or valid setups that occur in both those markets will help you take those trades. The one thing that you do not want to happen is to get frustrated because there was a wonderful setup in ES at whatever it was, say it was 3:30 a.m., whatever time it happened to be, right? And you didn't happen to be at your desk at that moment. Maybe you had a major phone call, maybe you had something else that you had to do. The worst thing you can do in this business is to get frustrated, and then your mind, which is part of your process, is lost to you for that little bit of time until your mind is back with you. That's not what you want. So one of the reasons why I've been talking about smaller timeframes and looking at these other markets is to make sure that you have those opportunities or repetitions, as the term is sometimes used, to get you your setups and to get you your R's. Again, if you are taking an equal dollar value risk, not an equal point value risk, but an equal dollar value risk, which is the number of points times the units per dollar that you are risking, then it does not matter if you have a wonderful setup in ES which nets you 2 points, or a wonderful setup in ES which nets you 10 points, but that you took a 10-point risk on. As long as it, in terms of the R, justifies the trade, it doesn't matter. And you'll hear people go on about home runs. I'm not into home runs. Home runs means you're going to be one of the most frustrated traders around. You're going to spend forever missing loads and loads of valid setups because you're waiting for that one home run. That's often not what trading is about. Trading is about being a casino in the same way that the algos are casinos against you. It's taking the opportunities when they present themselves, accepting that the market can go in both directions, so you can be wrong just as much as you can be right, taking that and moving on. And if you never get a home run that week, but you make you make what you hoped you would make, then does that matter? And I would respectfully suggest no, it does not matter. Anyway, just a thought. So thank you very much for dialing in. I hope it was of value to